Okay, Nick Waterman here from NMPG. Tonight we've got Roma, but before we announce, we've got a couple of really important things to make the announcement right at the beginning, because people watch this after the event, is that things are getting a little bit tougher in the boiler manufacturers at the moment, and especially Worcester. And Worcester have had some issues with a chip that they need to get from the Far East, and there's been some big delays. So if you go into Wolseley and ask for a Worcester Boss boiler, you might get knocked back from a point of view that they don't have many of them in stock, and they're finding it very hard to source. So we reached out to Ideal, and Ideal have given us some contract support, extra contract support on their new Ideal Logic Plus, which they have never done for anybody before. It is a trade purchase. They have given us contract support on that product. But before I move on to that, is I like Worcester Boss boilers, and a few people have been moaning at me saying, "No, I can't get that, can't they? Very good." Their chips are down at the moment and they're finding it hard. And the last thing that we do is kick somebody when they're down. They supported us when no other manufacturer supported us like they have. So we're not going to get rid of them. We're not going to say they're not a great boiler. They are. They're one of the best. But I must say thank you to Ideal Logic to coming on board and to supporting us. So we're still with Worcester Boss. They are a great boiler manufacturer, and we'll carry on supporting them as well as they have been supporting us in the past. So I'll move on from that. So have I forgotten anything, Anthony?
Well, just some clarifications on the Ideal stuff then, Nick.
Yeah.
So previously we've had support on the standard Logic boiler through Ideal. That's now swapping over. We do have simultaneous support on them both now for the next couple of months, but that's moving over to the Logic Plus. The difference being that you will get a 7 years warranty as standard with the Logic Plus. You don't need to fill in any kind of forms as you had with the Logic, and the display is a little easier to use as well. So it's a bit more of an equivalent, but we'll let you know as soon as Worcester's back.
And when do we go live with that?
So the pricing went live with that this morning.
Good. Okay, that's really good news. So you can get hold of the 30 eyes and the 25 eyes. Okay, the 2000 is stopped being made at the moment. The 4000 Worcester Boss is, but there's a bit of a backlog, and the 8000 you can get. Okay, so that's just putting people at mind at rest. It's all to do with this chip that they're struggling to get hold of into the UK marketplace, and there's something to do with Protect My Let. Tonight is the last day.
You've got one more day. So tomorrow is the last day for the Protect My Let Black Friday giveaway, which is 250 quid's worth of Love to Shop vouchers. All you've got to do is fill in a form that says when your insurance renewal date is, and that's it, you're in the draw. So you don't have to do anything more than that for the sake of almost getting 250 quid. What do they do with that information? Well, when your insurance renewal rolls around, they'll give you a call and see if they can get you a better deal. So it's worth doing anyway, but for the sake of 250 quid, even better.
Yeah, and we had a record month with them in, what are we now, November, in October. We had a record month with them. They've got quite a few now suppliers supporting NMPG members as well. So give them a call, they can always help. Can't always promise you they'll be the cheapest, but I promise you they'll be there to support you when you need them. Okay, so let's get on with Roma. We've got, God, where is everybody? I can't see anybody at all. We've got still people coming in. So I can't see anybody, Anthony. I don't know where they all gone.
Do you need to see people? There are people here, and just get my insurance on that.
Yeah. Yeah. So we've got Ben from Roma, who's going to talk about bridging, finance. I don't like really talking about finance because give me a boiler, give me a kitchen, give me a bathroom suite and paint, etc., etc. I can talk all day long, but when it comes to finance, I leave it to the experts. And Paul brought these along back in January, wasn't it, Anthony?
Yeah, we launched in January, but I was checking earlier on, and honestly, it feels like years ago, just how quickly this relationship has progressed and the feedback that we're getting from members as well.
And the feedback, that's what I wanted to go on to, was the feedback was being superb, that they're there supporting you, holding your hand, especially with new people who are getting into this new, and they'll be there to sort of kind of support you and help you, and they're only ever a phone call away. I'm not aware of one issue that somebody's rung up and had a moan about them and saying, oh, not very good. I've only had very good positive feedback. And when positive feedback comes from Paul Hilliard, you've got to stand up and take notice. He doesn't take anybody a compliment. So simple. I had to get that one in. Yeah. So
to be fair, Nick, finance is a hard thing to get right. With things like boilers and timber and that sort of thing, you know where you are. But with services, it's a tricky balance. So yeah, props to Roma for that.
Okay. So it's Charlotte and Ben tonight from Roma Finance. So if you want to introduce them, Paul, Anthony, officially, to get their slides up and say hi to everybody, that'd be great.
Sure, Charlotte, do you want to take the slides for us? And Charlotte is the head of over at Roma, and we've got Ben Lloyd as well, who's going to be doing the presentation. He is the new business manager. I think I've got it right, Ben.
Yep.
For questions tonight, pop them in the chat. I'll put something in there in a second, so you can see where it is. And myself and Nick and whoever else will read them out throughout. But if you do feel really brave at the end, and no one so far has taken me up on this, stick your virtual hand up and invite yourself on stage and speak to Ben, Charlotte, myself, or Nick, one-to-one. So without further ado, Ben, let's go.
Thank you very much. Thanks, Nick, Anthony, Paul, and the team for inviting us tonight again. Obviously, the second webinar we've done with you guys. It kind of does feel like a long time, but also it's gone so quick. And we've done lots and lots over those last 11 months, which we'll go through together. The aim of tonight is to not really bore you with finance details and get into the nitty-gritty of rates and things like that, but really it's just a presentation to show you what we can do, what we have done, and how we can help you along with your property journey, whether you are starting out, you just want to find a little bit more information about how you go about things, or you're a seasoned developer. And both myself and Charlotte will guide you through the presentation. Please do, any questions you've got, either ask them throughout the presentation or wait till the end. Be more than happy to go for some quick fire questions with you.
Yep, perfect. Okay. Oh. I can't get it to.
If you click back into the presentation again.
Yeah.
Or you've unshared.
No, I didn't. Oh. Sorry, everyone.
You were brilliant on the test, Charlotte.
I know, what's going on?
It's the pressure.
There we go. Right. Hi, everyone. I'm Charlotte. Sorry about that. Just to introduce Roma, if you've not heard of us before, we are a specialist lender. We focus on short-term and medium-term lending. So such things as bridging, development across residential and commercial solutions. We also have a medium-term buy-to-let and holiday-let product, so you can safely exit your bridging or development loan, which has become a problem for many over the last 2 years, especially during the pandemic, there are only about 20% of finance lenders and products on the market as what is normally around. So this solution did certainly become very, very popular. We have institutionalized funding. We have 8 different funding lines, which is very unique. Most lenders only have 1, 2, possibly 3, but we have 8, which we like to have for security, and it does mean that we can do a lot more. We have a lot more flexibility with the products we can offer. We can structure our loans to your needs. We have amazing people working in our team. We have a huge team of underwriters with a lot of experience. A lot of them are property developers themselves, or landlords, landladies themselves, so they know exactly the pitfalls that we need to be watching out for. And we have a people before property ethos. So we can lend where other lenders may not. We lend on the borrower rather than the property. So we can actually take a real shell. We've had some in the past, but as long as we can see that you've got a plan and drive, we can potentially lend where others may not. Ben, do you want to pick up?
Yeah, thanks, Charlotte. Yeah, so as Charlotte's mentioned, you know, we do a lot of standard bridging finance, which covers auction finance, your standard bridging finance, so for quick purchases that need to be done. Refurb finance, so that could be a light, medium, or heavy refurbishment project. We've done a couple of those in the last few months with the LMPG members. It also covers semi-commercial and commercial properties. Just recently, there seems to be a lot of interest in land development. So plots of land that have planning to build 1, 2, you know, up to 4 units potentially, and we can support those as well, whether it's your first time or you're experienced. And obviously, we have our 5-year medium-term products, which cater for buy-to-lets, holiday lets, serviced accommodation. These really were created to help borrowers exit their bridges should they need to. It's been a great product which a lot of LMPG members have made use of for speed and ease.
And why is it that you say up to 4 units for the land finance?
So 4 units is the most that an LMPG member has actually used us for at this moment in time. We can lend, we can provide finance for up to 10 units. An example from an LMPG member was a customer that bought a piece of land with planning to build 4 units. But really, although it was their first scheme, their power team behind them, so their project manager, their architects, the people on the tools were very experienced. We were able to support that borrower, even though that was a scheme, you know, a scheme like that they were doing for the first time. So you're right, Anthony. 11 months. We've completed on £2 million worth of business in that time frame, and we've got heaps more in the pipeline. So it's currently with solicitors, and we expect that to be a lot more before the end of the year. We get really good feedback from our customers. As Nick said at the start, we do like to walk customers through the process and make sure that they're updated throughout the whole process. There's nothing more stressful than buying a house for yourself, or, you know, going through that whole process of wondering what stage it's at, when it's in underwriting, you know, is there any paperwork that's needed, or getting through to your solicitor. So we aim to take that stress and hassle away, and really hold customers' hands and make sure that they're well looked after and updated throughout the process.
Okay.
So there's just some examples here of some of the headline figures that we have for our standard bridging. Now this covers the light, medium and heavy refurbishment products that we have. So there's 2 types of products that we have. It's a Roma Prime and a Roma Plus. And all that really means is there's a product for new people getting into bridging finance, or, you know, getting onto the property ladder, and there's a product for more experienced people. But typically you're looking at loans from around 75,000 up to 3 million. Charlotte will explain the process that we've just recently implemented soon. The application process is really smooth and straightforward. And for anything that, for any projects that require a light, medium or heavy refurbishment, providing you have a schedule of works outlining the cost involved, then you know, they'll breeze through underwriting really.
I just add on that with our refurb products, because that is where we're seeing a huge amount of growth at the moment. We have different levels, as Ben just said, light, medium and heavy. But a lot of lenders will class heavy refurbishment as anything over 25% of the value of the property on cost of works. But we will go up to 50% on a light refurb, which means your rates are less. So you could actually buy a property for £200,000, spend £90,000 on it, and it will still be classed as a light refurb. So it's just based on percentage of value. So what Ben alluded to before is our new channel, which is called Roma Flow. I know. I didn't pick the name, which is worrying considering I've been marketing.
I thought you were head of marketing.
Yeah. So it's intelligent touch underwriting. So actually all we need from you now when you're putting a standard bridging case in, so light refurb, an auction or a straightforward residential bridge, is a signed agreement in principle, a signed application form and evaluation or evaluation fee. We don't ask for bank statements or proof of ID, proof of address, anything like that. It's very, very easy. Our cases fly through. We're aimed for 80% of cases to be done in about 15 to 28 days. And that is working. So that is well in line with auction houses and timescales. Bridging is usually required to be quick. So this is a guarantee on it. We'll give you direct access to your underwriters. And it's all done with our technology. So it's very, very minimal hassle.
You say that you give access directly to your underwriters. One of the big complaints of when I'm on the road, well, doing presentations, and there's always finance people there talking, is that people can never communicate with the underwriter.
Yeah, there's a direct line and direct email straight into the underwriters.
Okay, that's really good.
We have a member in the group that's used this Roma Flow process 3 times recently. Now they're quite experienced and normally use the high street. However, he's been that impressed with the speed of the application, the decision was the speed in which the decision was made to lend to the customer, and having that access to the underwriter has completely switched his thought process into how he will acquire finance going forward. So even though the rates are more expensive than the high street, because he can get that access to the underwriter, he knows that if he needs a certain document, he can pass it straight over to that person. They'll process it. It's been done really within 2 to 3 weeks, and he's super impressed with the speed, and hopefully we'll do a lot more business together.
So is this how you're now handling any new business, or is it a specific arm for people who want it done really quickly?
No, everything goes into Roma Flow. If it's bridging, everything goes into Roma Flow immediately first and gets assessed. If it's something a bit more complicated or there are extenuating circumstances, then it will be moved into the more structured team, as we call it. It's still kept as quick as we can, but we just might need a bit more information on it. So, but yeah,
so there's no additional
at first
cost
glance, everything goes in.
Then?
Sorry?
There's no additional cost of using this process?
No.
Okay, brilliant.
So members, because you're going to have new members here, Charlotte, what kind of deals get taken out of the Roma Flow into what we call more the standard structured flow?
It's called Roma Clog, Nick.
Yeah, that's what they call it.
Like that.
It's what we call the structured team. So it's if something comes in and we find out the property is non-standard construction, so we might need a bit more information, or we realise that they're really going all out and it's going into a heavy refurbishment level, so we need a schedule of works. So it's only, adding minor things on, but for the most part, everything will go in straight into Roma Flow, and hopefully most of it will come out as that. Okay. So development deals, we can't do that. We obviously need more information, but most bridging is just flying through.
Okay.
Back to Ben.
Thank you. So obviously, as I mentioned, we do development finance. Now that really for us, development is different than refurbishment. The development we would normally class as somebody building something from the ground up, or potentially converting a commercial property into residential, which we're seeing a lot of, or we've seen a lot of in the last 11 months as well. So an example, we've done a couple of church conversions, pub conversions. There's a lot of vacant pubs. They seem to be a hot topic. But yeah, so anything ground up or converted from commercial to residential will fit under this development umbrella here. And again, there's something for everybody. If it's your first project, and you've never done anything like this before, you know, then obviously we can support you. The rates will be slightly more expensive than they would be if you were a seasoned pro. However, you still get the same level of treatment. You know, the underwriters will pay attention to the team around you, as I mentioned. So they'll just want to make sure that the builders that you're working with, they've got a good CV, it can be evidenced, and the person that's done the drawings and the architects and everybody involved to help you get that project finished. And that's where the attention switches to. So our buy-to-let, so we've got a 5-year product, and this runs across buy-to-lets, HMOs, holiday lets and service accommodation. It's a 5-year product, and where I'm seeing a lot of LMPG members use this product is to actually exit the bridging loan. So they will buy something, they'll buy a property, increase the value of that property, whether through one of the various refurbishment products. Once that property has increased in value and is tenantable, they can then use this product to repay the bridging loan, and any spare cash left over they can put towards the next project. So this is really useful for first-time buyers, first-time landlords, people that may not have a full-time job, so there's no minimum income requirements. It's a really good way to be able to give that customer peace of mind should they struggle to get refinance elsewhere.
Just a couple of things. Can you go back, Ben? Just you've got some things there like top slicing available. Can you explain that to new people? Yes.
So top slicing is where the minimum monthly income required for the property doesn't quite meet the stress test. So I think our stress test is 125% of the rental income.
Yeah.
So let's say, for example, you have a HMO and the monthly payments are £1,000. You're only currently generating £800. You can use your income, or you can use income from elsewhere to top up that payment.
Yeah.
So as I mentioned, we also do the holiday lets. These have been really popular, mainly towards the start of the year. If I'm honest, they seem to have dried up a little bit. But the guys that have used this product and turned a property to be used into a holiday let have certainly seen some huge benefits. We've seen a lot of people purchase these properties in North Yorkshire. So there's a customer in Whitby and Scarborough, and then you've got some customers in North Wales as well that have turned a normal property into a holiday let, obviously to maximise the revenue that they can receive. But also those properties do have the ability, should we see a downturn next year or the year after in holiday lets, it can be easily flipped into a standard buy to let, and lenders like that flexibility, that ability for that property to have mixed use really. Just to give you an idea of some of the schemes that some of the members have done this year. Commercial to residential, as I mentioned, turning a shop into residential, a church or a pub into flats, for example, that's been popular. This one on the left, the before, was actually a funeral parlour and a charity shop. The customers bought those commercial units and converted them into 3 residential properties. And there was land at the back that was also converted into 3 units as well. So they turned that little row of shops there into 6 dwellings. So we provided funds for, we helped them purchase the property. We gave them 100% of the build costs to build these the new properties at the back and to refurb the existing structure. And once that property was finished, we then refinanced them onto that 5-year buy-to-let product. So that they could repay the bridge, and then the cash that they had, they could put towards the next project. And I think the next project is just about to get started now. Another similar example. This is a semi-commercial property with land at the rear to build another couple of houses. And again, this is something that people are looking for, trying to spot these opportunities where they can buy a property that has a large garden, a large plot of land that they can split the titles from, replicate, the house that's the existing dwelling on there, and then either refinance or sell that property once it's been built.
So there are actually 2 more case studies. So there's this one here. This is the type of thing we're seeing a lot of. So just properties that have been in a quite a bad state, bought on a bridging loan with the intention of renting them out. So these ones have been 2 properties purchased together for 170,000, and we provided the loan to assist with the purchase and some of the renovation. So they have to be brought up in EPC rating. We are looking to do more green products going forwards, and we will keep you advised when those start coming out. But in this case, once it was all completed, the gross development value of the property was 290. So it was the bridge was exited by buy-to-let as planned, and it's continuing to be rented out.
Just a question. So which houses for what happened to which one? So you've got before and after. So you said these are 2 developments here.
It's images. They're next door to each other. It was 2 houses next to each other.
So, it's nice to see a Howden's kitchen being replaced by a Magnet's kitchen. That looks rather nice. Sorry.
We aim to please.
I had to get that one in. Sorry. I was getting a bit bored, so I thought I'd chuck that one in. I'm going to get such a rollicking from Anthony later. Sorry, Anthony.
It's just like the really awkward, cheesy grin, yeah.
Get that one in.
So this next one is a bit different. So this is just to show you how flexible we actually can be. So we funded the first passive house development in South Lanarkshire in Scotland. So these are carbon neutral houses. So it's air tightness, ventilation systems, triple glazing, boreholes, water. They are really quite something. So we funded these. The challenge with these was that the valuation came in as 0 because there was no comparables. So we had to take a view, as they say, and be flexible and decide to push ahead, where a lot of lenders would have actually said no because, well, it's groundbreaking, isn't it? So the site was actually finished, and all 4 houses have been sold above the value that they were put in at, and have done really, really well. And our customer is actually working on the next one with us as well.
You said that there's no comparables. Do you mean to say that there's this type of property development had never been done before?
Not in this area. It was one of the first in Scotland, and it was the first in South Lanarkshire. So valuers look at the area and as part of their valuation and to ascertain the value of something, but there was nothing to compare it to. So it came in at 0.
So how did you reach a conclusion of what the value should be then? Because you mentioned that they sold for above it.
Yeah, they did sell for above it. So we put in the value based on similar types of property in the area, and we just had to take a view on it. We knew that this is the way that the world is going to go. There's a lot more pressure on landlords to increase their EPC ratings, and it's just going to continue in that direction. So to create carbon 0 houses, they are very impressive as well. So there is actually
Sorry, come on. My apologies. Come on.
I was just going to say there is actually a detailed case study on our website, which I'm happy to point anyone to if they would like to see it.
Okay. One of the things that does come up every now and then is about down valuation, because the valuer, it's got really no comparables within the area. Are you saying that the person or the member can come back and talk to you and kind of give you an explanation in your dialogue with that individual? It might still only be down valued, but it will be an up value if you feel that it deserves that.
I think that we can always have conversations about it. I mean, this was quite an extreme case. Down valuations are happening. but we are asking our borrowers to allow a sort of 10% contingency for everything at the moment, due to things like down valuation and the cost of materials, which are going up so much. The red line on my screen. Yeah, I mean, it's always worth having a conversation with us, so we will talk.
Anthony, what's going on with the screen, mate?
Yeah,
sorry, Spencer is drawing on the screen, so if I could ask you to stop, because it's putting the guests off.
Just on that point, Nick, about down valuations, it's a really good point. One of the benefits for using Roma's 5-year product at the end of a bridge is that the same valuer that valued it at the start of the project will go out again. So you've got consistency in decision making from that valuer, therefore less likely to have down val. And obviously because of that, as well as it can be done with speed as well.
No, I just wanted to bring it up because there are down valuations I'm hearing about. So it's good that there's a dialogue where you can't ever speak to the valuer. You can't speak to the finance people. They say, that's the value, you live with it or go elsewhere. I'm just trying to get over to members that there is a communication, there is a door open that they can come and talk to you about.
There is. I mean, if there are often options for restructuring in case if something's down valuing considerably, then there can be, I'm not going to say there will every time, but there can be options to ensure the deal still can go through to fruition. But we just have to investigate all of those different options. It's one of the great things about being so flexible.
Charlotte, I'm going to press you on this take a view thing, because I know you've said it twice and it's on the screen there in scare quotes as well. What does that mean and how long does it take?
Well, that depends on each case. Taking a view, as I say, we lend on the borrower before we lend on the property. So if we can really see that there is a really solid plan and there's experience or an experienced team behind someone, we can do things that perhaps other lenders can't do, such as this one, for instance. The borrower in this case had quite a lot of trouble with it because it's passive house. It's not really been done very much here. So it's just worth having a conversation. If you've got a weird and wonderful idea, we're always happy to listen. If it makes good business sense, we're in.
If you put this in a portal or put your details in the computer, it's probably going to say no. And we'd like to at least explore, the opportunities, find out a little about the borrower, get to know them, get to understand what their background is, what they're trying to achieve and how they're trying to do it, who they're included in that. And that no could potentially be a yes after getting to know the customer.
And that necessitates building a relationship with the member then, rather than kind of going by an algorithmic.
Our customers, our borrowers are at the center of everything we do. So just to put some meat on that as such, during the pandemic, when there were a lot of lenders weren't in the marketplace or were reacting, where everybody was reacting to the situation going on around them. But we really looked after our customers in the pandemic. Every single one of the loans has redeemed. No one defaulted, anything like that. And I think it's up to 40% now of those people, every loan's redeemed, and 40% of them are on their next project with us.
Okay.
So yeah, it's always worth having a chat, and we are here as face to face or on the phone. And I'm just get to say this, Ben is actually an ex-Sale Sharks player, rugby player.
Who is?
And Ben, our Ben.
Who are they?
And we are their official sponsor, one of their official sponsors this season. And so I'm going to hand over to Ben to do this bit. This is his bag.
Yeah, it's a different type. For those that like rugby, it's a different type of exit strategy that I deal with now. But yeah, we teamed up with Sale Sharks. what we're offering customers, anybody that's affiliated to a rugby club, you don't have to be a member in particular. You just have to. You could be a parent, a player, somebody, friends of a local club. We're offering the chance to give them £500 worth of training equipment to any of their teams, whether it's mini, junior, or the first team. When we complete a case, if I take my son, for example, he plays for the under-11s at our local club, and on a Sunday they'll get the balls out of the bag and they're playing with balls that are 10, 12 years old. There's no grip on them. They're expected to pass and catch like the professionals, and they've got absolutely no chance from the get-go. So we've just completed on a deal recently for a chap that coaches some kids at Burnage Rugby Club, and we've just given that. We're just in the process of giving the club a heap of rugby balls, brand new training balls for them to filter down the teams, which is going to be really good timing given we're coming into winter months now.
We've got a lot in common, Ben. I used to play for a rugby club, Leicester Lions, and
okay,
we lost every match we ever played. Turns out it wasn't the equipment. We were just rubbish.
Anthony.
This is a true story, Nick.
Oh God, you let me die. Mate, you don't need me on these anymore. You are brilliant at hosting these webinars. I must say that, Anthony.
Well, I thought with 53 webinars in, I've not even mentioned my.
I'm still as bad as the first one.
Right, you've asked for some questions, and I've got some for you. Ruth says, I'm interested to know if you have bridging finance for 12 months and your planning takes longer, etc. So by the time you're ready for development, you can be very close to penalties on the bridging. Are we following so far? Yeah?
Yeah.
There's such a thing as rolling bridging finance into development finance.
There is, yeah. I think it's a good question, because certainly what we've seen is a lot of customers come to us for either further advances because of the increase in materials, or not being able to get their teams on site. So they're coming to us for longer periods to finish their projects. And there's a couple of options. You can, for bridging, you can actually do up to 24 months. However, what you'd probably look to do is take out a facility to purchase that property or piece of land. And then once the planning comes through, switch it to development finance. One thing we do a lot of is help somebody build from the ground up. Once that's wind and watertight, then put them onto a cheaper product, because that structure's solid. Again, a way of saving them money, and then so they're not, there's less chance of them going over their term. And that's when bridging can be scary. That's where it can be expensive. But if we get that term right at the start and really get to find out about you and your project and how long things will take, we should be able to avoid that where possible.
Lovely, thank you. Nev's asked, do you have a product for properties rented out to Serco?
We don't have an exit product for that. No, we can help build the properties where somebody like Serco will offer the a lease once they're built. Social housing is a hot topic. It has been for the last few months, and actually, how you class vulnerable tenants is really quite speculative now, because it's such a wide brush. But I think it's something that we might see certainly in the next 12 months, but it's not something that's available right now.
Steve has mentioned, he said, you really haven't mentioned commercial lending. I don't understand what kind of questions. So Steve, that might be a good one for you to actually come and ask the questions live directly, if he's confident enough to do that.
Go on, Steve.
Come on, Steve, be the first. Is he listening? Is he going to?
We'll give him a minute. I'm going to message him privately and see.
So I'll start, and then obviously if he wants to.
Yeah, because
1 minute he said. He's coming back in 1 minute. Good.
Fine. But
I'll put him right on the spot there.
No, Ben, you kick things off, mate.
Okay, so we do a lot of commercial properties.
Yeah.
Typically, we'd lend up to 60% loan to value for a commercial property. However, if that commercial property has planning in place to be converted into residential, then we can increase that LTV to around 65%. And if it's semi-commercial, then you're looking about 70%. But there has been lots of interest in these vacant pubs that we're now seeing. Yeah, like I said earlier on, a couple of church conversions and things like this. So shops with storage above that can be very easily turned into 1 or 2 flats, as long as it's got separate access. That's quite popular. But it's something that would probably fall out of Roma flow, just because there's a little bit more intricacy involved. But it's definitely something we've seen a lot of in the last 6 months.
Yeah.
Steve,
Okay,
good evening.
He comes back because
there we go.
Good evening. Good evening.
Good evening, Steve.
I think I might have got the wrong end of the stick. When I was looking at the highlights of what you were going to be discussing tonight. So I'm looking for a lender at the moment that I can do a remortgage on a commercial property. Barclays are wanting to offload me basically, because they say I don't fit their criteria anymore. So
nice.
yeah, well, that's life. I've got a property, it's worth at least 200,000. I've got about a 70,000, 72,000 loan on it at the moment. Yeah, that's the basic information. I'm looking probably to lend 100 on the property and to repay the 70 and have the other 30 towards a deposit on something else, maybe. Don't know if you can help with that at all.
At the moment, we don't have a commercial term product. It is something that we are looking into for the future, but as at the moment, we don't have one. I know there's a fair few lenders out there that I could put you in touch with if you would like me to do that afterwards.
The other problem that I've got is that the loan with Barclays is like 2.2%. And the only things that I've managed to find out there are, crazy interest rates, 5-6%. I'm thinking, what on earth?
Yeah.
Well, they go up a lot higher than that, I'm afraid.
Oh, I'm sure they do.
No, I'm afraid it's not something that we would be able to do at the moment.
No problem.
Hopefully in the future we will be able to. But
I was sat with the family next door when you called me on, so I had to escape into here. So.
I am so sorry, Stephen, but we wanted someone to come out there. Yeah,
everybody's watching the one show next door, you see, so that's on in the background.
But Steve, Claire will put you in touch with people.
Sorry?
And you never talk with them.
Oh, yeah. Totally.
All right, excellent. All right, sorry,
anyway,
Steve.
thanks for tonight. No problem. Cheers, man.
All right, thanks.
Thanks, Steve.
Roger Lancaster. Gareth? Sorry, Gareth. Anthony?
Sure. Roger's asked, do you take into account... Oh, hold on. Roger's unmuted himself. Are you doing this yourself, Roger?
If you like, yeah. I just wanted to know whether they take equity in a larger portfolio into account when they're actually considering a project, or is it more likely that they look at the team behind it and the project quality as their go-to assessment?
Thanks, Roger. With the underwriters will take everything into consideration, really. The experience of the team, the power team they would call it, around the customer is really important. But what a lot of customers do is potentially leverage funds from properties that they own to put into the deal. So obviously that de-risks the loan somewhat. So obviously we can get comfortable with things, and as we keep talking about, we take a view on things. So it can help the application. Customers don't need to have cash. They do leverage funds from their maybe their own residence or other buy-to-lets or properties that they have to help them with their new purchases.
Thanks, that's great.
Thanks, Roger.
Thank you, Roger.
Ben, you mentioned earlier on about the commercial finance just before Steve got on. that the LTV could change from 60 to 65 to 70%. So is there a sort of amount of criteria wherein you can say we'll lend you more or less?
Yeah. So yeah, there is. You're right. So in some circumstances, we can lend 100% of the purchase, for example, and customers can do that by using property that they own. And refinancing those, or we take an additional charge on them so that they can get the funds required to purchase the thing outright. But yeah, if it's a commercial property and planning is not yet granted, it's around about 60%. They might have an investor or other properties that they can put into the deal to help them get as close to 100% as possible. So
you allow other properties to be used
to
get to the 100%, because that's, I mean, cash is king, as they say.
Absolutely,
They want to get a property. They've got their cash tied up. They've got 4 or 5 other properties, yes, and they want to leverage against that.
Yeah, it's really popular. Becoming really popular. Yeah,
as long as they're not maxed out on their mortgage on those other properties in the background, we can look at them, definitely.
Okay, what do you call maxed out?
So if they're sort of over the sort of 75% LTVs, then it's not really going to be, viable, really. So
okay,
just the lower LTVs.
Yeah, ideally, what you're looking for, is to have a property that's unencumbered or has a very low mortgage against it.
Yeah. Okay.
Charlotte, earlier on, you mentioned the refurb, the light refurb. It was 50%. Is that 50% of the purchase price? So if you're doing
50% of the value. So if you've got a property that's worth 200,000 pounds, and you can spend up to 100,000 pounds on it, and it would still be classed as a light refurb. Doesn't matter what you're doing to it. It's just the cost of works against the property value. And then we'll go from 50% to 100% for medium. And if you're going all out and crazy, it's spending over 100% of the property value on works, which we have seen before. Then that's classed as heavy refurbishment.
And so it should be.
I'd say so. It's lucky there's walls.
Ruth put a comment in the chat just now, which I'm gonna get to quickly because I've really enjoyed reading it, which is, I've completed today with bridging finance from Roma, very efficient and professional service, despite my turtle of a solicitor.
Ooh.
Planning came through, so I have bridging, but soon need development finance.
Fantastic.
How much did you pay her?
Well, that would be telling.
Yeah, it would be. I like the way Charlotte
went.
She corrected herself. £100,000, £100,000. Bit of a snob coming out there, Charlotte.
Ross has asked, apologies, I joined late this evening, so missed the start. I'm looking at buying a non-standard construction, semi-detached, refurbishing it, including getting a PRC certificate before either selling or renting it out. I have the funds to buy the property, 165k, but need another 80k for the works. Is this something you'd be interested in, or is it too vanilla for Roma?
No, that's absolutely fine. That will fit the light refurbishment product Charlotte was talking about.
Yep.
I've done one today where customers already owns the property up in Newcastle, a HMO, and they just need works for, so they just need funds for the works. Our minimum loan size is around 75k. So if some people are just needing 25, 30k for a bathroom or kitchen, or to refresh the house, and it's not really for us. But on something like this, it's something that we can definitely talk about offline, no problem.
I think that's crazy. An £80,000 refurb is a light refurb.
Yeah. Well, what makes me laugh was Ben says £30,000 for a kitchen or a bathroom. Obviously, he's not a member of NPG.
That's why.
Jesus Christ, you lot.
Arta said, hi, I have a few questions about development finance. So I think the stage is yours, Arta.
Hi, thank you. Hi, sorry, my accent, but I'm originally from Poland. My name is Artur Delowski. So I'm also a member of the, the group. I just finished my HMO now in the north, Newcastle. The 5 and suite bedrooms and is rent out. And currently I'm doing the remortgage. And I was wondering, because I was working for a developer company before, I'm an architect. I was wondering how can I manage the process and the financial, of course, for the development. For example, I'm buying the land on my own, a small piece of land, like for example, for 3-4 units, and then I have a planning application, planning permission for example, residential houses. Then I get for example, a few quotes for a general contractor for this construction, and then I can go to you guys, for example, for financial, for 100%, for not 100%, and also if I'm a landlord, but I have no development experience, like, so how the lenders will look at me like this, and how I should manage this process. And the last thing, what is the best exit strategy? Should I keep it for me and should I sell it out on the market from your point of view, or maybe making the remortgage on the new structure and try to rent it out? So just a few questions basically.
Which one do you want to answer first, guys?
Yeah. So in terms of the development, you're absolutely right. Something that Roma would like to to have a look at for you. In terms of the 100% finance for the works, that is achievable. We do that regularly. Without going into too much detail, we use the gross development value, the GDV, so the end value of what that property or properties are going to be worth, to make our decision on how much we can lend. So let's say, for example, the 4 properties will be built. They'll be worth the whole thing will be worth £1 million once it's done. Our maximum lending will be 700,000. That includes the interest and fees and everything involved, and then you would work it back that way to see if that would fit, basically.
So I need to know the final valuation for all the properties, and based on this fact, you can calculate what is the maximum loan the value you can give to me. Okay.
Absolutely, yeah. And we'd stagger that in stage payments. So as and when that build progresses, you would be reimbursed for the work that's done and completed. So yeah. And I'll be honest with you, the question about whether to keep, to retain, or to sell, I mean, that is something that you would probably want to speak to your solicitor about, or an independent financial advisor, because we just wouldn't give that advice. We could help you with either, but yeah, it's
I think this is the next stage. But the 700, this is how the lenders pay. They pay this just in one, or they pay this by the stages during the house progression builds work. So someone come to the site, see, okay, you build the structural works, you did the roof, you did the installation, so we can pay you the next part of it.
Mm-hmm. Yeah, you're right. It's in stage payments. We call it in tranches. So typically, let's say, for example, we gave you a facility of £500,000. And this is where Roma are different to a lot of lenders. You will dictate to us when you need that that cash. We won't say to you, right, you need to draw down 100k month 1, 2, 3, 4, 5. It's as and when you think you will need that money, we will reimburse you or give you those funds to go and do the next stage of the build. Yeah.
Right. Okay. But do I have to make the proof that I did the work before you pay me this, or is it like in advance? Then I have to prove it after.
If you already own the property, then we can forward fund the development, so we can give you cash to get started. If we're going to assist with the purchase, then it will be in arrears. So typically, you would get that work. You would get 50 to 100,000 pounds worth of work done first. We'd send somebody out to inspect the property, make sure the works have been done, and then liaise with our customer service team.
Okay, so how about the interest monthly? Is like the progression of the stages when you also make the next stage of payment?
So the interest is deducted on the amount you borrow day one for the length of the bridge. So if you take a 12-month bridge, you're only charged interest up front on what you borrow day one. The rest of the funds that are available for the works are rolled up and added to the loan as and when you use them. There is a video on YouTube which has just been created that highlights the drawdown process. It's really, it's a short video, and it'll just explain the process involved when you are using money to do a development.
Yeah.
Okay.
So there was a question in the middle of all of that as well, where Art mentioned that he's an architect, but he's never actually done development before.
Yeah.
So this seems like something that Roma's going to have to take a view on. What does Art need in his power team in order to get the best kind of rates?
You want to answer, Charlotte?
Yeah, sorry, I didn't know if you could.
No, because I hear that you need to have a 5 house. You have to build 5 house to be classified as a developer in UK. So obviously, if you have 0 house built, obviously you are starting in a different position.
Exactly.
Yeah. We will vet the builders, the team that you've got working with you, and what their experience is, whether they've done it before. There's quite a lot of lenders out there that will consider, people who builders themselves who may have been building for other people, but they've never done it for themselves specifically. They'll class them as having no experience, and they struggle to actually do their own projects. But we wouldn't do that. In your case, where you don't actually have the experience yourself, we will look at the team that you've got behind you, and as a way to decide whether we would actually lend.
So if I get in the party with the project manager and the general contractors who is recognizable, which is he has the insurance for 5 or 10 millions in the liabilities and everything, so there will be a different story, and it will be much more, I would say, trustworthy deal for lenders.
Yeah, basically. So it just means that you've got a lot more access to. You've actually got access to achieve your property aspirations.
No, it's just I just want to understand, how difficult will be the process, especially from this position, but it's still, something doable, and
it's just providing the evidence, their proof of experience, and providing that evidence to us, and that's it.
So if I buy the land on my own, my limited company, I have a new limited company, I buy the land for the project. Should I buy the land at the 100%? I should be get cash, or can I also make the credit for the land?
Ben, what do you reckon?
It's probably something. If you want to send me some details after this, I can give you an illustration of how we would.
Okay.
Yeah.
Okay. No, I saw some land available, and I was just wondering, I can make a pre-application before I even buy it, and then make the application. But I was wondering what would be better for the vendors, for the lenders, to have the land bought with the cash, or also buy by the credit. So this is I just wondering how I can play this game, on this.
Well, on land, if it's got planning, the loan to value that we'll end up to is 55%. So you might be better off buying the land and then using us for the development.
Okay, that was my plan anyway, just to have the land and make on my own time, make the planning application. They have the planning permission, and this is the point where I can have a quotation for I make the RFQ, and I have a few different quotations to build this up. And then I can come to you guys and give me, help me with the financial rate.
Yeah. I'm happy to do that.
Okay.
Great questions. Thank you for coming on live.
Yeah, we've got a couple more. We've got since you invited the first person up, they're everywhere, Nick. So Paul's question first. Paul said, "What are your fees for Roma Plus Lite? The application fee, the site visits on refurb works, the types of stage payments, etc. For example, 300k auction price, 30% cash in, £100,000 refurb, GDV 450k."
I think the best thing to do is if I put my email address in the chat, and then I can obviously provide a quick illustration to Paul via email. There you go.
There you go. I forgot I had that slide on the end. Sorry, Ben.
It's fine.
Is that Ben?
Yeah.
You're a shooting photographer, Ben.
Should put one of his Sale Sharks ones on.
Jeannie, you've got a question regarding development finance. Are you there? Are you with us?
Yeah, I'm here. Thank you. It may have been semi-answered, but it's along some of the similar lines as Arta. Property I want to bid on tomorrow in auction, which is 14 flats, currently tenanted, which I would look to vacate and then redevelop into 8 smaller flats, because at the moment they're between 14 and 17 square meters. So in my opinion, really poor quality accommodation. And one of the responses I had on the bridging and the development finance was that I don't have enough experience of managing a block of that size. It would be the largest thing I've done so far. I just wondered, what is Roma's take on that, really? It's not a build, it's all internal. So it's removal of stud partitioning, reassigning communal spaces. So there's no build work at all. It's all internal. There'll be splitting of utilities, putting in central heating, fire alarms there, needs a rewire, that kind of thing. And I wasn't asked my experience or anything. I was literally asked about what are the properties I've got, what I've done so far. And it seemed to be cutting off at the pass. Is that the experience I would have with Roma as well?
No, we've done schemes like this before for customers like yourself, and when you're not extending the property up or out, externally, it's obviously there's not much risk involved, because you're not knocking down these walls and building up into the loft and things. It's just reconfiguration, really. So it'll just be to understand who you're going to be using for the work, really, and that you obviously have done your due diligence. You know what you're getting into, rather than just being reliant on somebody doing it all for you, really. But
yeah,
we meet every borrower face to face. Should tell everybody. I think it's really important we do that. It gives customers a chance to meet us and see us and understand who they're potentially borrowing money from. But likewise for us to build on that relationship and really try to understand how we can help that customer.
Is there some sense or value, Ben, from a speed of purchase, maybe advantage point of view, to come and have that meeting, to almost have as many ducks in a row as you can with Roma? So then as you bring a new project or proposition along, a lot of the background work is done in advance.
Absolutely, more than happy to do that. I've done that with a few members now, where we've got that relationship and sort of understand what they are trying to achieve, what they're looking for, because obviously the property market's still crazy, and they'll have their eye on a property, and sometimes it doesn't even go on the market.
Of course, yeah.
It's snatched from them. So, but yeah, you're right. If you want to, if you want to be in a position where you understand what you can expect from Roma, what we can lend on, what we can lend to as a customer, then I'd love to arrange, a meeting to see what we can do. Yeah.
Oh, that's good. I was talking to someone. I hadn't contacted Roma because initially I was just sort of testing out, with my existing broker, and a couple of people I spoke very highly of you. So I was like, well, that's all good. I've heard all good things on LNPG. So just to pass that on, a completely independent source, didn't know my relationship with LNPG or anything, and just said, Roma, good team. Yep, I'd work with them.
That's really, really good. Ginny, are you going into the auction to purchase this tomorrow?
Oh, Nick, I think I'm going to have a bottle of wine tonight, and then I'm going to see how I feel in the morning.
If you're still drunk, you'll go in and buy it.
Yeah, it's tenanted, and it's 80% UC. It's 2 of the 12 existing tenants, the tenancy agreements are missing. So I'm kind of thinking I might watch it. If it doesn't go, pick up the phone with a sensible offer, but request vacant possession. Because I know, the return on investment on it is almost 40% if you get it on guide price and you keep it tenanted as it is. I just couldn't sleep at night. It's a horrible place.
So there's 14 flats in there currently, and you're going to change that to 8.
It's 8 or 9, and because I only got a floor plan late this afternoon, which is prehistoric and quite faint, you know, some of this work, like from Ben's point of view, I couldn't right now give you an exact plan of what's going to go in there. So I'm doing my figures based on worst case scenario. Obviously,
Okay.
everything else is the bonus.
Just a warning, Jeannie. Tentative plats, big no-no. If there's any arrears, the seller can palm those onto you, and you'll have to pay those up front.
Yeah, there is one who they've disclosed as in arrears, another they evicted the other day. So these are the kind of things that, you know, it would need a lot of wine for me to wake up in the morning. Yeah, I'll go for it. But where I am at the moment, it's probably 85% no, but there's just too many red flags with this one. It is a jump for me, and I think I need a few less warning signs, alarms and sirens.
Well, you can always speak to Nicole. She says the best property she bought is after wine. So have a conversation with her.
Will do. Yeah. So thank you for the advice. I'll definitely get in touch, Ben.
I've seen a few examples recently. They aren't members, and they're not customers of Roma, where they've tried to obviously squeeze as many rooms into a building as possible. But then, you know, the quality is not as great. They've got high vacancy rates. Whereas if you just carve that property out, you know, maybe, yeah, like you said, to eight rooms instead of 14, you got a better quality, more space, different type of tenant, a lot less hassle, and probably full occupancy as well, which actually works out a little bit better.
Yeah.
But live in it, haven't you? You can't put them in a matchbox these days.
Oh.
People need somewhere to live and call home.
It's awful. I couldn't, you know, somebody might buy it tomorrow at that price, just take the rent and not worry about the rest of it. I couldn't.
Yeah.
It's not what I'm in it for. So.
Okay, thank you.
Thank you.
Anthony, any more on there?
Yeah, just a final question, unless anyone else wants to pop up with this tonight. Auction finance. When's the best time to approach you guys on that then?
Before.
How long before?
The auction. So I mean, anytime. So we have saved a few where we've had to do bridges in you know, 5-6 days. Our record is actually 5.5 hours.
Oh, wow.
So yeah, that was we haven't done that for a while, but yeah. But we'll actually, if you've got a property that you are looking at to buy, if you give us the details of it, we can actually do an AVM on it in advance and give you a ceiling price and an AIP effectively in advance.
Okay.
So you know what you got.
One thing I was going to say, I really was dreading this because I hate finance. Yeah, I have really enjoyed it.
Oh,
I must say, I have thoroughly enjoyed this.
Thank you. Well, thank you for having us on.
I've learned a few things today.
I thought you were going to lead that into something, Nick, but that was.
I
was just saying, I really have enjoyed it.
The one thing we've not mentioned. The one thing that we've not mentioned, and this is what I thought you were going to lead it into, Nick, is okay. We found out why we should use Roma Finance. Why you guys are so great. Well, what's the use of doing it through LMPG? What do our members get out of it that your regular customers don't?
Let you do this one, Ben.
So the LMPG members would get a reduced arrangement fee. So that'd be 1.25%, where our standard is 2%. That you know it's very much a like I say, a service that will hold your hand all the way through and let you know where you're up to at all points. You know. But the main discount is on that arrangement fee. And of course, if you are affiliated to any rugby clubs, then £500 to that club as well for training equipment.
Lovely. Well, look, it's been fantastic having you guys on. I've really enjoyed myself. I've really enjoyed having the members dragging those out a bit more. They might put me out of a job, but it'll be worth it. So Nick, I'll throw it over to you for the outro, as it were.
Yeah, and like I said, thank you very much. I don't get really involved in this side of things. That's Paul's job, Paul Hilliard. And just Paul, nice to see you up and around. Paul Hilliard had COVID and he's been isolated for the last 10 days and he's lost his taste and everything. So I'm glad to see you back to recovery, Paul. But no, I mean, just thank you very much for coming on and being so supportive. Like I said, I've had some great feedback from members and that's what it's all about. It's coming together and supporting each other. So thank you very much. Well, we've got our last one next week. We thought we'd leave the last one to the big one. We got Magnet, yeah. And we've got Magnet coming on board, and we've got 2 new people because we're all sick and tired of seeing Andy Gordon and Jill. And they're going to love me for saying that. We've got, they're going to really like me saying that. We've got 2 new regional, one's a regional director who's the number 2, reports directly into Andy. And we've got another gentleman who's a CKF manager, regional manager. Am I correct in saying that, Anthony?
Yep, you did right.
Yeah, I'm dead right. And it'll be their first time. So it's just giving a different perspective of LMPG and Magnet to our members, and you can come and ask questions and talk to them. But the really good thing is Magnet are just flying at the moment. The amount of business they're doing is just absolutely mind-blowing. I mean, we were averaging around between, well, only like 18 months ago, 2 years ago, about 400,000, 300,000. We're in the 600,000 to 700,000 pound a month bracket at the moment, volume of kitchens. It is just outstanding. And they're really, really pleased. So I want everybody coming on. I want everybody to give them a hard time next week. Yep. And asking loads and loads of questions because I got a list full of them. Yeah. They're going to wish they hadn't come on. I'm going to get a phone call tomorrow. I guarantee it. And says, do not kick off at them. Yes. Yeah. I got a list of them. So no, things are really, really good. They've got some new products coming out, new kitchens designs, different kitchens coming out in the next sort of 2 or 3 months. So we'll get hopefully a look into them. Worktops being launched as well. So I'm really, really excited. So please come and join us next week. It's the big Magnet. Yep. And it's not Andy Gort or Jill. There's 2 other individuals they're pushing our way. So I'm really, really excited. What are you on about? Why are you laughing?
I just can't believe what you're. This is our biggest partner. And you're saying, come on, attack them. Now your chance to have a go at them.
But Andy wouldn't expect anything else. I'm not saying attack them. I'm saying come out and give them ask loads of questions about them. Because
well, look, it's no coincidence as well that their next week is the 1st of December. The prices for Magnet kitchens also go up. Their yearly price increase has been brought forward to the 1st of December this year, rather than the 1st of January next year. It's an administrative thing. So if you've got a kitchen right now that you're sitting on that you're just not putting the order through for, do it now and save yourself that 5%. Yeah,
and like I said about Magnet, they've got some really exciting stuff coming through next over the next couple of months, which I'm really excited about. Some of their new designs, new kitchens, really quite. We've seen some of them. So we went when me, Tracy, and Anthony went up to their new head office. And don't forget, Magnet. Yes, we call it Magnet. It's not called Magnet anymore, is it?
It's Magnet Projects now.
Projects. It's not still called CKS anymore. So they'll be doing that, launching that. So I'm really excited, Magnet. I love the Magnet presentations. It's always really good fun, and we always learn a few things.
I see you getting excited already, Nick.
I am. I'm gearing up myself for next week, as it were. Yeah. And I only come back from holiday yesterday, so I'm nice and brown. So I'm relaxed.
Okay.
Now that's a professional outro if I've ever seen one. Ben and Charlotte, you've been fantastic tonight. Thanks to all the members that came, especially those that have asked the questions, and good to see you again, Paul.
Yeah.
Thank you very much for
Thank
having
you,
us.
guys. Thanks very
Real
much.
pleasure. You see you all very soon.
Yep.
Cheers,
Bye now.
guys. Bye.
Cheers. Bye-bye.